By Markets Live. The following Crypto Academy video is designed to help you understand how to build an order book and create candlesticks. Trading can contain substantial risk. By watching this video, you accept the full terms of this disclaimer and take responsibility for your investment decisions. This lesson will focus on answering the following questions. Before we continue, pause the video, read through them, and be certain to minimize any distractions. What happens behind the scenes when candlesticks are created, when you see the price change, and right now this chart, it is on the 8-hour time frame. So a lot can happen within all the time that it takes for one of these candlesticks to form. When we look at everything that's happened over here on this exchange, we can see trades from literally when the day started. Okay, so when we think about where all the trading action is happening, the majority of the volume on this crypto is over on another exchange right now. There is a little bit of a difference in the price, a little bit of arbitrage opportunity, and when we make this candle, this is going to update and it's going to change the price gap, and so we may see that get reflected over here on Q Cryptos. I am going to leave my buy limit in, and I believe I'm going to be able to push price up to this 1999 area. So let's go ahead, let's type in the quantity, and let's go ahead and kind of add up how much crypto there is. So there's 841, 300, 103, and 50. So if I buy 1300, what's going to happen when I do that is it's going to remove these orders off of the book. It's going to put the total amount that I bought into the available flicks that I have. It's going to cause this candlestick to go up. So watch what happens when I click buy. We just made that candlestick. And now you can see that it says that the price has changed by about 30%. There was a little miniature algorithm that was designed to put in this little fractional order after that price movement occurred. We brought it right up to some structure very nicely. And we can see where the quantity of the next cryptocurrency exists. So very interesting when you think about what happens behind the scenes when people are trading cryptocurrency. Okay, and if I wanted to, because I have some Flixo right now, notice this price level of 1738. Just because I don't want it to be a nice big green candle, I want to see if somebody else is willing to contribute to that price movement. I'm going to go ahead and I'm going to do this. I'm going to click on that level, this 1738. I'm going to sell 1. And now we have completely changed the dynamics of that candlestick by selling a fractional amount. Notice how when I put that order in, even though I typed in to buy at 1999, I bought some at 1740. I bought some at 1800, 1885, 1994, 1997, 1999. All of these orders that came through at the same time, this was me. You saw the candlestick get created. It was a nice big bullish candle for a moment. And then because somebody, and that could have even been me, I could have decided to put a buy down here and I could have sold it to myself, I believe. I do want to check that. I wonder if I can do that. So if I go to say buy 1 at 1720, it's going to put it on the book. And now if I sell 1 to myself, can I change that candlestick again? Let's see if I can actually do that. So it seems as if I just sold Flixo to myself. And you can see it there on the order book. You can see it reflected in the price change, but it doesn't. There we go. Now that big bullish candlestick that we created, we just made it red. We just manipulated that candlestick. We literally bought up to a certain point, sold one to bring it back down to the open, and then sold one again to bring it down here. If there weren't these other buy orders on the book, we could technically bring price down closer to our other buy limits. And so this is what's happening on any given market when you see candlesticks getting created. There are market participants that are thinking in a certain way that are going to do things to the candlesticks to make you believe a certain thing is about to happen, whether that be a technical pattern that they show you, whether that be something related to the fundamental analysis, they play off of that. Okay, we can see that somebody else just bought some Flixo, so that's going to change the candlestick here in a minute. But this is what happens when you see candlesticks moving up and down on your screen. There are traders just like you and me that are taking positions in the market. And you saw it firsthand where these individuals have the ability to accumulate a position, and imagine accumulating a large enough position to where they could completely control the dynamics of what is happening on your screen, of what you're seeing on the chart. Imagine having 100,000 of this cryptocurrency. I could move this market. And so recognizing this and understanding this from a trading perspective, it's fairly simple, right? Now you see how the candlesticks are created. And this isn't just the way that it's done for cryptocurrency. This is how it works in any market. You have people that demand to buy the crypto at any certain price, and you have the supply controlling how high price can go if the demand exceeds how much is available at these certain price points. It's natural that buyers have to go up and purchase the crypto at a higher price, which is going to drive it up, create those bullish candlesticks, and then once people are willing to take profit and get out, they can look at where people are willing to buy and say, yeah, I am willing to cash out. And then that's why we see these downward movements. That's why we see after the price goes from 10 cents to 90 cents, big bearish movement because people made a lot of money. And so they won out. And then we're waiting for more information to confirm that this project really is going to continue going up again. But it is something that I wanted to invest into, and I believe that this was a really great opportunity to show you all how candlesticks are created. In summary, traders around the world contribute to price movement. And whenever you choose to invest in cryptocurrency, the candlesticks will include your actions too. This is because we have direct access to add or remove liquidity from an order book. In the spread, it is determined based off of how far it is for you to buy or sell that particular asset. This concept is universally applicable with any market, and there is always going to be a difference of what price you can buy or sell at. This is because we have direct access to add or remove liquidity from an order book. And the spread, it's ultimately determined by how far away the best possible price to buy is and how far away the best possible price to sell is. Because once you have traders that are willing to buy and sell at the same price, it is going to create a match which will move the price because any market participant that directly makes the order book or takes liquidity out of the order book is contributing to the candlestick creation. And all of the exchanges will show market participants this information. Be sure to leverage the resources made available to you, and the most important thing is to stay plugged in. As you implement the information, ask questions and remain open minded, because all trading requires is persistence, discipline, and acceptance that you can and will learn this skill set.